In today's video, you're going to be learning how can you time the tops and the bottoms in the stock market. I did so today and yesterday, all for free, live trading on Twitch. So if you're interested in watching me trade live completely for free, if you like what you see, then join my premium group. The Twitch link will be down below, so make sure you check that out. So before we get into the video, remember guys, leave a like, comment, subscribe, so that it helps push these people to more people out there so they can get financially educated just like you are. And as always, make sure you take notes. This video is going to be full of education. You're not going to want to miss that. You're going to have to watch the whole thing and take notes so that you can improve your trading. So today, let's first talk about what are the basics of understanding how to time the tops and the bottoms. We first have to understand that 65% of the times the trend is going to continue. So that means more often than not, if you get a high, you're gonna push for another higher high. So you're pretty much fighting the trend. You're pretty much somewhat fighting the odds. So you might be thinking, why is timing the top and the bottom good if you're fighting the odds? If the odds are most likely the trend continues, why are we trying to fight it? The reason becomes then your risk to reward becomes much better if you're able to time these key levels between the tops and the bottoms. And we're talking about key levels. It doesn't have to be that like, hey, the price let's say reaches 100 and that's the, it's only going to go down from there. No, it can be like it hits 100, then goes to 99, and then goes to 101. Timing it for that place in time to be potential retracement or a potential bounce before the trend continues. That gives you greater risk to reward and also minimizes your risk. And we're going to be diving into the charts in just a little bit so that you see exactly what I'm talking about. So also we have to think about what is important, right? The trend is your friend until it's not. People like to say the trend is your friend. If you chase the trend after, let's say, stock moved up so much, I'm sure it's happened to a lot of us. As stock pushes, you finally decide, hey, this trend must be a strong trend up. You FOMO in, you get in at the top, and then the trend completely flips out on you, right? Big issue that I see traders make is they're always trying to catch these big home run trades. Now you're gonna position yourself in catching a home run trade, 100%, 200% gain in, but you can't expect that to be every single day. So if you see someone that always posts 100, 200, 300% gainers, more likely than a gambler trading on 0 dates. Let me ask yourself this: if you're trading with $100,000, a huge large amount of money, would you be risking all that money on a 0-day contract? 0 dates can move -30, -50% in a single day. No, you more than likely wouldn't. So you'd be minimizing your risk. Exactly why I like to trade this reversal type of trades. And also, the people that have that mindset that always want to look for a home run and for something to keep running for a very long time are the type of traders that probably don't have a lot of money in their bank account, and they feel like if they have a $500 account and they only make $20, it's not much, right? $20 to them is like, yeah, I'm too good for $20. I need to make 100, 200, 300. But the reality is that that's just not the case. You're not always going to make those huge percent plays. Let them come to you. Put yourself in a situation, you make a nice gain, you can take profits in the green, and you can let a couple of runners run and build the small wins up. I actually been keeping track by a third-party source, keeps track of all my trades that are alerted. There's a signal in my Discord group. I'll put an Excel sheet here. If you follow my Instagram, I've shared this multiple times. If you follow Twitter, actually I share that on there as well multiple times. You can see if you roughly only trade with $500 and you follow my trade last 2 weeks, you'll be up a little over $3,200. So you started from 500, then you're almost at $400,000 in your portfolio. And the crazy thing about that, and people don't understand, I'm actually only counting the first PT. So for example, today I hit 20% partial profit, I took that, and it ran all the way to 100%, so I'm not making a lot more than that. But when I'm putting an Excel sheet, I'm actually lowballing it and only putting the very first profit target. If you want to copy my trades, copy my signals, learn from me, again, the Discord link will be down below. If you can't make the Discord link, this is free Twitch. When I'm available, I'll be streaming on Twitch as well. Now let's get straight into the charts and see what do I see today to be able to time the bottom on the S&P 500 today. So this is the S&P 500 on a 5-minute time frame. I streamed all this actually live on Twitch today, and everybody saw, and I alerted a play also in our Discord chat room of an entry around this 405.9 level. So you guys can see right at the lows. We first have to understand the market opened up on this candle, right? This 930 candle right here, and it was a big red candle. So a lot of people were actually, kind of mind boggled and didn't understand why I was looking for a long position. It was a huge red candle, and as you guys can see the trend from the pre-market, guess where it was? It was a trend down. And if you actually zoom this out, the overall trend last few days was what? A nice retracement, right? But I was looking for a bounce there. A lot of people didn't understand it. That's why I make videos like this, so I can educate everybody so they can understand. So a thing that I've actually spoken about many times on this channel was the golden pocket. If you're not familiar with the golden pocket, you go here, it's called a Fibonacci retracement. You click on this and then you make 2 points on the screen. Simply how this works, you target the swing low that you want to target and the swing high you want to target, in this case to the top and the bottom for this impulsive move up, and it makes a golden pocket right in the zone. Again, this was also something that I mentioned the day prior when we took the short position with the target price of this. As you guys can see, this golden pocket was not hit yesterday, so I knew that today if we were going to retest the level to potentially bounce, more likely will be the golden pocket. Now, also you get to understand I had to think in my head, what is my risk reward? Let's say yes, the trend does continue down, and it totally could have. I totally could have been wrong and the trend continued down. But then what if I took a short position here after the market open? Where is my stop loss, right? My stop loss is going to be above this high, and then my profit target will be like maybe targeting the golden pocket before it bounces. Then look at this, it's a 1-to-1 risk reward. It's not very good. I'm risking $1 to make $1. It's just not really a good trade to take. So then the bounce with the combination of a risk reward to the setup made a lot more sense to look for this bounce. Look at this. Potentially, my target was at first this one, so a 1 to 2.5, almost a 1 to 3. Ended up being in the end a 1 to 5 risk to reward, and 1 to 6 almost risk to reward. Making this trade on the opposite side a lot more enticing. Also, you have to understand another thing. I saw this falling wedge that happened in the pre-market and yesterday. When we keep in mind the falling wedge, just to take it from the bottom all the way to the top. So you can take this to where the breakout area was right there. That's how roughly the falling wedge should be playing out. So then you take that to the breakdown area, and guess what happened? Exactly that. So I had confluence, guys, and you have to understand confluence is more than one thing pointing towards potentially bounce. Again, give me extra confidence into this trade. Also here we have this demand area here. You can see this red box. So it's all different things that I was thinking more than often than not I'm probably gonna bounce here. And actually, as I learned in our Discord group, this was an initial entry. So this was the first entry for half of my size, and I was hoping to actually hit a little lower to 405.5 to 405.4 in this area to add more to my position. That unfortunately did not happen, and we caught a reversal. But at least we got our first entry in. And the first profit target. Where was my first profit target? A lot of people ask me. It was right into this demand area, aka another order block here. As you guys can see, it hit right in there. It also was the market open, so I was afraid that maybe we'd go to the market open and then double top and potentially continue lower. Because the could have still gone lower, but that's why I took my first partial there and moved out my stop to break even, roughly around right here, and it never hit that level and just kept running. Now, what's interesting is actually look where we bounced before another move up. Again, guess what? From this low to this high, guess where you bounce right in this golden pocket. And just so if you're drawing your Fibonacci's and it shows a bunch of different lines, you can go in your settings and adjust them, click them, unclick them, mess with them to only show the ones that you want to see. Now I like to have the 0.618 at the 0.66 level. A lot of people like to have the 0.5 level as well. I can kind of eyeball the 0.5 level, so I just don't have it on my chart, right? And then we can see this big bounce happening and just rocketing up for the pretty much the rest of the day. So this trade ended up being a really huge trade. Now another trade I wanted to put on here that I actually did not take, I did mention in the chat room and on our free live stream today, was this rejection off of this level here. So as you guys can see, the pre-market high, you guys can take it here to the low, which will be right here, right on this level. Guess what happened? You hit right into it, and as well as this small order block here, you rallied right into it before selling off and then finding another golden pocket bounce here and then running it all up, right? So I mentioned this trade. I unfortunately did not take it, but could have been a nice little trade. If we look at the risk to reward on this level, it would have been, let's say you had an entry here, stop loss above this white level here is resistance. If you take it, would have been a nice 1 to 3 risk to reward. And this goes back to like, hey, you can catch these bounces and reversals and these tops and bottoms in the market. Even if it doesn't continue, the trend isn't huge, at least you catch a nice reversal, nice 1 to 3 risk to reward, minimizing your risk. Because you always gotta ask yourself, let's say you went to long here, right? Where are you longing? Where's your risk? It's like, okay, we broke the new high. Where are you risking? Where are you aiming? You're aiming for here, but then where's your stop loss? Realistically, your stop loss should be one low day, and even if you target up here, it's a 1 to 1 risk to reward. It's just not very good. If you were looking long, you gotta look for this pullback, right? Enter in the pullback and then push higher. In this case, we've been right. Actually mentioned from one of our head traders, Don, today, as he was streaming as well alongside me. He mentioned this 0.618 golden pocket bounce here to potentially continue the overall trend higher. So it's all about understanding what the trends are in the different time frames. You guys can say this was a small downtrend in a larger uptrend. There's a small downtrend in a larger uptrend, a larger uptrend in a small downtrend. So it's all about understanding your trends, having your major levels drawn out, as you guys can see, with different resistance level here drawn out. They still apply. For example, here you broke above it, and now you turn into support, and then going to next week, it's going to be probably a key level that I'm going to be watching for a retest for them potentially push higher. So that's all for today, guys. It's understanding your levels. Don't look for those home run trades, let them come to you. As always, if you find this information useful, make sure to leave a comment, leave a like, subscribe down below. As always, peace.